Good morning, everybody. It's Chris here from Student Education with the 4 Majors Analysis update for the 28th of April 2011. Just looking at the CTC strategy template on our 4 majors this morning, and I'll be starting with the Euro against US dollar on our daily time frame. As per usual, let's put in our support and resistance lines on the big time frame. So daily, we know we're up by this pullback here, which coincided with a previous high, and we saw a bounce to the upside. So strong resistance in this area became new support, and we saw a massive move to the upside. Very bullish the past 2 weeks, breaking previous highs. A lot of resistance around 14,500. Headbutting. Then we saw a nice exhaustion candle, bit of consolidation above that area there, and then 2 days of indecision, and then engulfing, and then we've seen price revert to the upside. Now, as you can see, if I move straight out, you can see this resistance level at 14,500 was a long-term resistance. And if I look even further back at 14,800 is another one that we saw last year, in fact, and we're trading above it. Great. So going into today's trading, we've broken above a previous resistance support level. So ideally, what we want to do now is we want to see price staying above this. If you can stay above this line at 14,800, then obviously we can see consolidation taking place for a while, because you'll find that people will be taking profits, as we saw over here, for example, a slowdown after a big move, and we could see consolidation. As long as that consolidation is taking place above the 14,800 mark, then that bodes well for this pair in terms of overall trend. CTC is still well extended, which is a great indication of further progression. The other scenario would be that during the course of today, it's traded above this, but it fails to close higher. So we see price as it stands now on the Asian market trading slightly higher, and during the European session going into the US session this evening, we see price pull all the way back again and close lower than the 14,800 mark. If that's the case, then what we could be seeing is an exhaustion candle similar to this little boy over here. If it happens and closes lower than the 14,880 mark, then it's giving us a clear example of exhaustion creeping into the market after an extended uptrend, and what we could see is either consolidation below this band here, which will now become resistance, because we saw yesterday's close right there on the 14,800, which is resistance level, previous resistance level, and if it closes lower than that, then we could see a clear indication that we've now hit the ceiling, and we could see something similar to this occur at these resistance levels, support and resistance levels. If that's the case, then we could see price revert to the downside, and then possibly the trend line coming back into play again. So it'll be interesting to see how price trades today. If it closes higher than 1480, then it's a good indication that price is happy at these levels, and we could see further extensions. If it closes lower than 1480, then we could see definite indication that there's a bit of exhaustion creeping in. There's a slight hesitation in terms of there's more bears coming to the table, i.e. people taking profits off their table, and we're seeing price pulling back, and if it closes lower, then we could see further extensions to the downside. Intraday, let's have a look. Everything should be extended or blue on our CTC, primarily because of the breakouts we saw yesterday after the news that came out on the FMCO results in the States. Interest rates were kept at 0.25%, no change. This reflected in the markets. The US dollar did take a handbrake against all its pairs it trades against, and we saw higher highs in terms of the euro, sterling, and lower lows against chief and Japanese yen. So what we want to see is a CTC well extended and blue in our favor, which is exactly what you're seeing here. If I just take a fib projection on a 4 hour, for example, you'll have seen yesterday's breakout that we saw above the 14,700 mark. If we look at where the trend started from initially, we can clearly see that where price is trading right now is above 100%. So this first move, initial move of this after the breakout, we've seen an extension just recently of 100% of that prior move. So now, if you could, and funny enough, if we can see it closing higher, and remember, 1480 or 14,800 is our long-term support and resistance on a daily or bigger. So let's put that in, mark it down, make it nice and thick, so you know straight away if it's still trading above 14,800, then we're bullish. If it's trading below, then we should see consolidation, and we should be looking for opportunities either for further downside movement or just a band. So breakouts, pullbacks, etc. will occur around these areas. As you can see now on a 4-hour, for example, we're well extended or extended above this area. So now it's also trading at 100% of the initial move. So now we should see consolidation. If we can stay above this consolidation area, then we could see further attempts to the upside. 100, there's 161.8. There's another one at just over the 149700 mark, which would be the next extension if price can stay above the current area now at the 100% fib area. Okay, so looking at our smaller time frames, the CTC and the moving average is well evenly spaced out. The lower you go down, you can see the consolidation that's taken place. We've seen since 4 a.m. GMT this morning, price pretty much going sideways, a lot of indecision candles taking place, and most importantly, still trading above that all-important daily support and resistance line, the 14800 mark. So you can see consolidation taking place above us. For the first time, we have a red arrow, but we don't have the red on either side of the CTC, and our candles aren't red. So if you look at our 15 and 5 minute, however, you're starting to get that, and it's trading below the moving averages. But all importantly, we're still trading above that all important price support and resistance level at the 14800 mark. If it's trading below that, then we start looking for shorting opportunities. If it's trading above that, all we're seeing is consolidation taking place. As I mentioned, we're trading at this move here to there. We see an extension. So if I just show you again, it should show you that we are now trading at 100 or 61.8 on this particular time frame. If you look at it from here, of this move, which is the 100%, and we're seeing consolidation taking place. So now we're seeing a pullback. As long as that pullback is above the 14800 mark, then we should be looking for further upside movement. If it falls lower than that, then what we're looking for is exhaustion pattern taking place, and we should see price pull back to at least down to the prior support and resistance levels around the 200 period moving average for this 50-minute time frame, around 146900. A lot of resistance in this area. So if it breaks low and close lower than the 1480, then we could expect price not just to reattempt 147700, but 146900. Next pair up is sterling against US dollar. There's the daily. Very, very bullish day yesterday, primarily because the GDP quarter figures, quarter on quarter figures came out yesterday, and they were positive. The initial figure, the prior figure, was 0.05%, which wasn't great for GDP. And then the last quarter, which started in December, and a lot of people are having a bit of hesitation because of the bad weather we had, and we thought it might post a negative reflection on GDP because of, as we know, the weather did pretty much bring the UK to its knees. Lots of snow, a lot of cancellations, transportation issues, etc., and that all reflects on GDP. And there was a lot of hesitation as to would that reflect on this past quarter's GDP. And when it came out, it was positive. The forecast was 0.5%, and it came out at 4.5%. So very, very positive. So we know that the last quarter, even though we had some really bad weather, we still saw the overall UK market grow, which is a real positive. There's been a lot of talk that sterling's near to a double dip recession, etc., like that. It would have been better to see a stronger figure, but 0.5 is what they were expecting, and we did have that, and the global market took it favorably, and we saw sterling rise against the US dollar. And with the US dollar also not raising their interest rates late in the afternoon, just was a double whammy for sterling, and we saw further gains over the Asian market. And going into the European session this morning, we've seen price move higher. So you can see this double movement. You can see the hesitation, the indecision prior to the past couple of days prior to yesterday's reading. There was everybody's anticipating yesterday's news, and sure enough, and this is what Nikki and I talk about all the time, is rather wait for price or the news to become available, and once the market has deciphered what that news is likely to do for the market, then you're going to find the big boys with the cash are going to move the market. And what we want to do as traders, we obviously want to be trading in that direction with the market. We don't want to be counter trading. It's pointless, and you end up just getting burnt most of the time. So great, there was an opportunity after the quarter-on-quarter figure news announcements early in the morning at 9:30 GMT yesterday to actually make some profit up until just before the news announcement stateside for interest rates that came out unchanged, and which didn't really bode well for the US dollar, because Bernanke wasn't all that forthcoming in terms of what was going to likely occur for the US economy, and we saw sterling gaining more strength on top of that news. So what we're seeing now, if I do a fib projection of this move that we saw yesterday, we're trading well above the 61.8, and we're heading towards the 60 or the 100% fib at the 16,800 mark. Slight pullback this morning as we speak of the European Open. So if we look at the smaller time frames, you can see the CTC should be well extended. We're trading above a prior resistance level. So this is a 4-hour. You can see the breakout. That'll be an entry level for. We had our CTC in our favor. So anybody trading 4 hours or higher would have been a great opportunity yesterday. The close of this candle at the 1662 and the 800 mark to get in, and you'd be up this morning. However, if you look at the 30-minute and lower, you can see the consolidation taking place since 4 a.m. GMT, like its European counterpart this morning. And if you do a fib projection of this, you can see the move there. And what we should be looking for is trading close to the 100% fib extension. So we should see pullbacks occurring now, consolidation. And if everything goes accordingly, you can see swing highs. Then what we could be seeing is price pulling back to this trend line. As long as it stays above this area here, then we could see extensions higher. There again, on 50 minutes, you can see the pullback taking place. Ideally, we don't want it to be closing lower than this prior consolidation here at 1669T, which would give you a rough figure. If it fails to find support in this area, then obviously what we could do is see price revert back to a prior support and resistance level here at 166300, and fail to find support there again, we could see price reverting back down to a prior resistance level at 165700, and another one lower than that, roughly around the 16500 mark, which is where we've been in the past. So you can see this is going to be your first support area. Failure to find support here would see your next target of 1663 being the next one, and failure to find support here would be 1657, and failure to find support there would be 1650. So if it finds support at 1660-90, then it's just a consolidation, and we could see potential upside movement. Look for a break of this swing low, these swing lows, to give you momentum upside. CTC is in our favor, so all we need now to see is confirmation of a support in this area here to see an opportunity to trade to the upside. Next up is US dollar against Swiss franc. This is an extended downtrend. You can see the CTC is well red across the board, and if I move well out until looking at data way back in June of last year, you can see momentum is definitely to the downside. The US dollar is trading an all-time low against this pair, and we've broken lower swings, and we are still seeing lower swings being posted. Recently, quite a big one around the 0.900 mark, where we had a support area, a breakout pullback, and now we're seeing the continuation of that breakout. If we look at the extension of this, for example, prices closed lower than the 61.8% on an indecision yesterday, and we see in the European session, or the Asian market in the European session, trading lower than that indecision. Our next port of call would be the 100% fib area, which would take us around the 0.8600 mark. So that'll be our next target. CTC is in our favor. Intraday, you can see that we're starting to see a slight pullback taking place of this. some support at the 0.8700 mark, but you'll notice we've got lower swings in this downtrend. If you look at the initial move yesterday, do a fib projection of that, it's trading around the 61.8%, and we've seen a pullback on that. So on an hourly chart, that's your trend now, and the trend is now in play. So on an hourly chart, if price fails to break higher than this trend line, make it nice and thick, then all we're seeing is a pullback, this intermediate trend, pullback. If it fails to break higher, then we could see an exhaustion candle where you're seeing the wick pierce, fakes people into trades thinking they're going to be going long, and then it closes lower, and then we see a reattempt of lower lows. So those of you trading higher time frames, we want to see a close of this candle here. Will give us a good confirmation. Are we going to see a potential further upside movement, or is it just a consolidation of, or if I do a retracement of here, for example, there we go, you're seeing a pullback from here. We're now at the 38.2% retracement area. So if it fails to break higher than 38.2, then we could see this is just a confirmation pullback to this trend line, and then we could see further exhaustion creep in. CTC is still in our favor. We've got our red candles, and the CTC is negative. It's trading below all the moving averages, so we should be looking for shorting opportunities. If you're trading an hourly chart, we've got to wait for this candle to close. If it closes higher, then what we could see is a definite support area around here happening at the 0.870 mark, and we could see upside movement to at least the prior swing to the downside, which is the 0.8735 mark. This one over here, which takes us back to around the 61.8% fib retracement mark. There again, you look at the 15-minute, for example, swing highs on this time frame. As we speak, is now testing the Asian market high for this pair at the 87.15 mark, and that is going to be our trend line. There we go. You can see a clear indication of the trend line in play now. So if it fails to break higher and close higher than that trend line, you can notice if I swing back, you can prior support in this area. Is this a new resistance, the breakout resistance? These are all things you've got to be aware of. See that? Lowest low. Now we're testing the underside of a prior support and the new resistance. Will that come into play? CTC is in our favor on the smaller time, but not on along the tops. We've got a candle blue, but not the CTC. So still trading below all the moving averages. And as I mentioned, if we don't see a close higher than that, then obviously we're not going to be confirming potential upside movement. So these are going to be your potential targets. There's a lot of iffiness in between that, but I'm just doing them quickly, and this is how you should be reading your charts, just really, really quickly, looking at guidelines, relative support and resistance areas. So 15-minute candle has to close higher than the 8715 mark, and our CTC needs to go blue in order for us to even contemplate going for any possible longs. Until such time, the CTC is negative, and we should be looking for shorting opportunities, and we follow the rules accordingly. Last pair of the day is US dollar against Japanese yen. As I mentioned on the first two, that we saw the US dollar lose ground against its counterparts, and sure enough, it's reflected in price movement. You'll notice that we saw a big up candle yesterday, and then price pulled back slightly. If you look at the 4 hour, for example, we've seen massive move to the upside. US dollar rallied prior to the news announcement, and then we saw price pull back significantly. Failed again at a 200 period moving average, so we know there's a definite resistance level at the 82,500 mark. So price needs to be trading above that in order to be considered bullish, but failure to do so has seen price pull back significantly, and we're still in a negative trend because of that. CTC is well extended in our favor on a 4 hour, and as you can see now, price is testing a prior support and resistance level at roughly the 8150 mark. So if price fails to break lower than that, then we could see consolidation taking place at this area today. We want to see a definite close lower, but be aware that we've had a lot of there's a possible bandwidth of trading in this area here. I'd run roughly between the 57 to the 81.50 mark. So price is trading lower. It's trading below all the moving averages. The CTC is in our favor, but be aware that there is a support area here at roughly the 81.51 mark. So fair game. I mean, if you really wanted, you could do it here, but there's definitely a resistance level in this area. So to be not faked into trades, we want to obviously be factoring that on board. We want a clear indication of price movement, so you can either wait for a definite bearish signal, which means a 4-hour candle closing lower than this, or looking for an hourly candle to close lower than that for an entry level for all you long-term traders. Or we could see a bounce, the CTC going blue, and then we could see a potential trade to the upside at 82.50 mark, which is a good 100 pips or so. So looking at the intraday charts, all negative on all the time frames. CTC's in our favor. Looking for bearish setups. Smaller time frames you go to, like i.e. the 15-minute, for example, you can see a definite support area here, but the swings are still lower. So we could see a potential breakout here. And because price is trading in our favor to the downside, we could see that momentum pull it lower. And if that's the case, then on this time frame here, we've got support at roughly 81.50, which is not worth trading. But we have further opportunities to the downside. We've seen price really it's been to 81.35 and lower in the past, so we could look at that as a potential target on the 15-minute or lower time frame. In this case, you can quite clearly see, even go down to a 5-minute chart, you can see definite support taking place at this area here. So ideally, we don't want to be looking for buying opportunities until this trend has been breached, and when it's been breached, then obviously we could look at possible upside movements. Straight away you can see we've had a price support and resistance level at 82.05 market, which will take us to the 200 period moving average. Is there pips to be made in this? Yes. Is it significant pips to be made? Not necessarily, but you can still make your pip returns on this. Ideally we want to be trading in freer space, so anything above the 200 period moving average, above 82.25 would, in my eyes, be far better profitable. Otherwise, there's an opportunity of just being stung. So it's entirely your choice. Just make sure you follow the rules of the CTC. Make sure your money management fits your trading plan, and just trade what's on the chart. So that's it. Hope this was of benefit to you. Make sure, as I mentioned, just keep your trading very simple. The CTC will allow you that because it's giving you the double confirmation with the buy and sell arrows. A lot of them are lagging. It's a lagging indicator template, primarily there just to help you guys who are still new to trading how to better decipher what the market's likely to be doing. And once you can understand that, then obviously going forward your trading is going to be a lot more profitable. Make sure you follow the rules though. It's vital that you follow the rules of the template. Once you've done that and you understand it, then it's just going to bode well for your trading long term. Have a great trading day. Make sure you look at the news, see if there's any important news announcements coming out today which will reflect on price movement. Example yesterday was the interest rates for the stateside, and locally in GDP we saw the figures for quarter GDP figures here in the UK, which also pretty much moved the market. Happy trading and trade serenely.